Hey everybody, great to be back here with you for Trading Price Patterns. My name is Mike Fairbourn, Senior Manager Trading and Derivatives at Schwab. Hey folks, I'm sitting in for Rachel, who does a great job with this class. She's been on a sabbatical for the last 4 weeks, but expect to see her back next week. So it'll be fantastic to welcome her back. She's such a great talent. And folks, she looks at a lot of different price patterns, stuff that we normally wouldn't look at. A lot of times our eyes don't even pick up on expanding triangles, diamond bottoms, diamond patterns in general. So I look forward to having her back, but it's great to be with you here today, folks. Today, hey, we're going to be talking about price pattern searches for option trading. So we could do stocks as well. We do a lot of stocks in this class, but specifically today, there is going to be that option theme associated with our discussion. So with that, a couple of key searches. One really straightforward but powerful nonetheless. I wanted to do both of these in ThinkScript for you. One of them I've just had to build over time for the bull flag specifically, and I've updated that a little bit for today as well. But we'll be looking at a few of those today. And great to have you all here with us, folks. Recognize many names, but many of you I have not seen before. So welcome. We do look at this class, as part of trading within our trends using other indicators, but the basis of it, really the core component of our discussion is price patterns. Okay, so we're going to be looking at those, but building searches specifically today, and look forward to that each and every week, same time, same place here with Rachel on this for this webcast specifically. I'm joined in the chat by a good friend, colleague of mine, Ben Watson. And by the way, you can follow us both on X, Ben Watson CS. My handle is simply just Mike Fairbourn CS, and I'll share that here too in just a moment as well. But let's get started with some disclosures so we get going here, folks. All right. Options, they do carry a high level of risk. They're not suitable for all investors. Now, information here is for general information purposes only. The paper money software application is also for educational purposes only as well. Now, with long options, investors may lose 100% of funds invested. We will be looking at those today. In addition, spread trading must be done in a margin account. Investing involves risk, including the loss of principal. And wanted to state over here too, there are risks associated with investing in dividend-paying stocks. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. An ITM option does have a higher risk of being assigned early. Now, there's no guarantee that execution of a stop order will be at or near the stop price, and past performance, folks, is no guarantee of future results. Okay, much of that you already know, but what we're going to do right now, we're going to take a look at a few different scenarios and setups. So before we get going here, what is so helpful for a lot of traders is just to get a general idea of market direction. What are we doing lately? What have we been doing? Where might we be going? Are prices breaking up higher? What's the general trend? And as you can see over here, we've been in a sideways channel for some time, really before October of last year, before Halloween, you could say, of last year. Right there. In fact, if I draw a line through there, we're virtually trading at the exact same spot we were previously. Now, more recently, we've got a price channel that's come in here. We've got one up top as well, as you can see. And folks, what we did do is I'll just zoom in real quick and take a look here. We had a really big candle pattern here, like a hammer pattern, and we're following it by a day up. And if you combine these patterns together in something that we will look at, that might happen towards the tail end of a price pattern, but that is like a morning star pattern right there. So that's a confluence of candles. We've got one big candle in the middle, but sometimes these can be interesting reversal levels, and a reversal may be coming right off of a key support level around 6,800, of course, key resistance up top at 7,000. So maybe we might be making our way back up to this level, possibly breakthrough, possibly, not, but we have been showing resistance there, as you can see, over longer periods of time. Now, what this tells us, though, is that, as we've been going into the sideways channel, there may be, for price patterns, bullish price patterns, there could be the potential for a move back to the top of that channel, right? We're on the bottom. We're seeing some indications here. We're just saying what some traders might look for, right? They might look for this. They might say, yeah, there's a pattern there. There's another pattern. We are at the bottom of the channel. Maybe maybe some geopolitical news might improve, or whatever the case might be, we might have some room to get up higher and possibly even break up. So there may actually be a bullish theme. So I'm just stating that because big picture, it can help to get a general idea. Hey, how are markets doing? There's a lot of companies in here and they can play a key role. I mean, the 500, this just a view of what a lot of traders would refer to as the market. If the market's showing bullishness, of course, that could help our bullish type price patterns. Now, having said all that, which you probably heard before, but just a quick review of it anyways, wanted to talk about really a couple of key patterns that we're going to do searches on today and really tap in to that thinkorswim ThinkScript capability, the capacity to create codes to help us find specific price patterns. So today I wanted to narrow that down to the flag pattern, which is very common. That's something that Rachel does quite a bit in this class. The last 4 weeks, I've been doing quite a bit of myself. I teach a lot of that in my swing trade class on Tuesdays, where we look at those time frames for flag patterns. But generally speaking, a couple of different scenarios in terms of those flag patterns. And the first one that traders might look for is this right here, okay? Specifically, you've got a flag pattern here, but then one that has, in fact, broken up higher. We talked a little bit about this yesterday, actually, in the swing trade class, but we want to look for specific searches to help us in this case. But folks, this could be one of those areas that traders would focus in on, because that from this point, if prices do break up, there could be this potential to extend higher here with a longer term kind of trend, if the trend's going up, right? And so we're looking at a breakout. When we look at this, I'm just going to erase this real quick, because I like to really dissect this so that when we look at the script, we know the script and the specific search that I'm going to share with you here. We want to know exactly what's going on, so we know the type of stocks that they're going to be being pulled up, generally speaking. Okay. The other one I have is actually a little bit more specific, but for our first search, we're going to be looking at one that's breaking above a prior resistance level here. Now, this resistance is a form, for some traders, they say that that's a further expectation. Some might even call it more evidence of a breakout, because you're beginning to, yes, take out the prior high, and then that trend might resume again back up to the upside, is what we're looking at here, okay? So when you look at this, though, and we look at these scans, if we come over here, we could say something that's really interesting, and that is this. There might be a certain time frame that separates these highs. And if we were to call this a 20-day high, or a 30-day high, 40, 50, whatever one we want to look at here, we're looking at prices breaking above a high right there, okay, above this point. Now, that could be seen as a price channel. And what's interesting is we do actually have a price channel indicator that can get us a long way in terms of finding companies that are breaking out above a range. We can also try to ensure that, yes, there is a trend going on, like prices are above, let's say, a longer term moving average. Let's say like the 200. It doesn't have to be the 200. It could be the 100, the 200-day moving average. Some people will look at a 30 or a 20, a longer term. But I mean, I'm just saying, there's a longer term trend that's been going up. Prices are above that, right? So this can be done very easily as a search too. That's going to be a little slight add-on here, kind of as a bonus to show you. But that could be also very important too, because traders like to trade with the trend in many cases with these price patterns. So we're really looking at something crossing above a 2030. Wanted to explain it first so that when I highlight it over here for you, you know exactly what we're looking at. So back to our trade tab, I'm just going to throw out Apple here as an example. Okay, here is Apple. There were a number of points. In fact, if you look over here with me, you see how we broke above this range, folks? Right there, where we finally got above it, that was a breakout. Now, it could have been a 30-day breakout, for example. We can look at the 30. But I'm going to show you how to do this very, very quickly. But I want you to have a reference on the chart, because we're going to be using an indicator for that script to tap into to pull this data across the S&P 500 or whatever basket of stocks you want, like that, generally like that. Sometimes it's like that, It might take 5 seconds. If it's a big database of a few thousand stocks, it's going to take longer than a quick snap. But 500 generally goes pretty quick. I'll show it to you. Let's show you the indicator first. Over here. Let's click on our drop down, and what we're going to do is we're going to go right into price. Just type in price C for price channel. Okay, there it is right there. There's your price channel. The default is 20. I'm going to do this. I'm going to click on my wheel and adjust this for us, though. So I'm going to go right to a 30 so you can see this. And I'm going to scoot on down, and we're going to make this line a little bit thicker so we can see it. That's always nice to have a thicker line. We can have a price channel below or above. I'm going to choose the one. I'm going to take the show plot off the low. We're going to choose the upper band plot. Dang it. Okay. What I did is I changed the colors for the other one. That's okay. I'm just going to quickly adjust this, and you can put in whatever style you want. It's just what you want to see. In fact, let's do this. Let's put in a dotted, sort of a dash line here. Click OK. There you go. And all this is simply doing, this is so cool too. Do you see what it did for us? It helps us potentially spot those bull flags. And it can be a very, very effective tool to use this coding on the back end for scans, which we have to build. But I'm going to show you how to do that too, so you have it. I'll also share them at the end as well, so you've got them. But over here, remember I was just pointing this out on Apple as our example. Where's the breakthrough, folks? We're using a 30-day price channel. 30 quite common too. So 30 calendar days. It's about 1.5 months if you look at it in terms of market days, I should say, market days. Okay, so bars. But look over there. Do you see it? So when we broke above that level right there, that could be construed as a what? Well, it's a breakout sign. How about here? Breakout sign. How about here? Do you see the lines? Look how many there are. Breakout, breakout, breakout. Now, do we have one here yet? No, we don't, but we've got a line drawn in there waiting for us. Where's our breakout? Above this level. Now, we could see, just visually, yeah, there is a line in there for us to try to capture. And what's funny here is this is more of a triangle breakout, which these can also spot. Something, that Rachel, myself, we've covered in this class pretty frequently. But the triangle, do you see it? It's noted for lower highs and higher lows. In that tighter coiling, then you can get a breakout sometimes, up or down. Oftentimes, traders will look for that breakout to go in the direction of the trend. As you can see, the trend overall is up. So that might be the expectation. But I'm just saying, not just flag patterns, but also you might see triangles. You might see inverted head and shoulder patterns. Shoulder, head, shoulder. Do you see the breakout? I see two of them. This could be a 10-day. This could be a 20-day right there. There's a breakout. There's a breakout. Now, the key is using the scan for a search, because if I'm just looking at this and going through the S&P 500 or the Russell 2000, that's going to take me a long time. My eyes are getting a little bit tired. I might have to have a movie, right, on my other monitor over here just to keep me going, There's so many charts to look at. But if we have a scan, we can narrow it down pretty quick. Let me show you what this looks like. All right, everybody, let's build that scan right now. Scan tab is the first thing we want to do. We're going to start from scratch. Now, here's a look at the S&P 500, right? Down here, a lot of companies. Oh, that's the S&P 100. Sorry, let's go to the 500 right there. So here's the S&P 500. We could use the 100, which is more larger cap companies, and generally speaking. But let me show you where we're at, so we're all on the same page. Up top, scan tab, very important. We've got to be in the stock hacker here to find these, okay? So stock hacker, next thing we want to do, and this is very important, where do you want to scan in? In this case, I'm scanning in the S&P 500, maybe some more established companies. They've been around for a while. They've had to meet the criteria to be on the S&P 500. I put that in here. And how did I get it? I just went to the public folder and pulled up the S&P. You're going to find a lot in the public folder. There's the NASDAQ 100 at the bottom there. So you can see there's a lot, the Russell 2000's in there. That's a big database of stocks to look at. Once we've done this, go right over here to the add filter. And we're going to add a filter, since we're in the scan tab, to create this search, we're going to scoot on down to study. Now this will pop up first. I'm going to click on my little pencil here, as you can see, and that just threw it on my other window. Let me pull this up so you can see it. There it is. That's just the same one. Now, first things first, you always got to do this. You just clear out the existing ADX crossover. Just hit delete on that. It's just a default. So now we want to just build this in the condition wizard. So we're actually going to be building ThinkScript code, but with the help of a condition wizard to get us going. First things first, add condition. Now, what did we see on the chart? We saw prices going above a study. And that's all I'm going to do here. See down here of my 4 conditions I can select. There's price. And I'm going to look at closing price. And by the way, that's any closing price, folks. That's closing prices right now as we speak. Yeah, or yesterday. I mean, they're closing as of this very second, but it's not like the end of the day close. At the end of the day, it would be the end of the day close for good. But right now, we're just saying, where's it at right now? Okay. And we want to state this. We want to say it is crossing above. This is our action field, not just greater than, because it could be greater than the 20 or the 30 period price channel. But we want to make sure it's actionable, meaning that it was below and now it's above. Crosses. Boom, right there. Just a simple click. One more click and we're done. Let's find that study. Right now we're saying the price crossed above what? You can choose any of these, actually. There's a lot we could build in here, but we're being very specific about price patterns today. Price channel, just like exactly like we had on the chart. I'll just put in price C. There it is. The price channel indicator. Click on it. Now, this is very important. Remember, there were 2 bands. There's an upper band and a lower band. What I want to do is I want to select the upper band. We're looking at bullish trades in this case. Okay, and we're just creating a very, very simple model here. Very simple, but very, very powerful tool based upon this indicator. Next thing is our length. Now, if we wanted a shorter term length, like I said, there could be shorter term sort of trades like this. You know, you might even like have something, very short, and you're just saying, hey, you know what? This represents to me, you guys can see that. I can't even see it myself with that yellow, 10 to 15 day high, very short term. I was going to say, let's flip it to a 30. The default's 20, which is interesting, but 30 might be a little bit bigger move. 30. Now, key point here, bars within. And what this means, if I said in the last 2 bars right there, just 2 bars, it means this, within 2 bars. So, yeah, it could be yesterday. It could be today. If it was 10 bars, it could be up to 10 bars, within 10 bars, right? Because sometimes the breakouts, you want to get something that might have happened fairly recently, and I'll tell you why, guys. This is so important too. Because if I even did, I'm going to use 2 today, just to keep it kind of tight. But if I even did like a 5, why would 5 be important based on what we're doing? Well, let's draw this out. If I did, I'm going to do this right now. Let me just do 2, and I'll save it, okay? And it's saved again. We just created our search. And by the way, here's the code. We just created this code using the condition wizard. There's the ThinkScript code. If you guys are into building code, I do a lot of code building in the Thursday class, which is actually tomorrow for ThinkScript. That's a little bit more advanced. In fact, I'm going to share with you before we go an advanced ThinkScript that really does a lot of the work for you. But we build those and we do take topic requests for that class. Tomorrow, we're doing like a double divergence indicator. Some traders look at it divergence. We're going to be looking at double indicator divergence. Total side note, but there it is. Okay, now I'm going to run this here. But before I do, I wanted to show you why it was important to use possibly within 5 days, a breakout within 5 days. Let me show you why. In fact, I can show you on the chart right here. Okay, look at this. I'm going to pick on one range over here. Or even I could pick on many of these ranges because this is how it normally, this is how it can happen and frequently does happen, and it's this. See the breakout? If I just say 2 bars and I'm done and I don't see the search, maybe I don't run the search that day, but what if I use something like, and this actually works perfect for this indication. I've seen 5 hit a lot of times, but if I said, give me this signal, which is the breakout, right? We're crossing through that yellow line. I'm going to highlight that right there on that bar. That was 1, 2, 3, 4, and guess what? 5 days ago. Folks, is this still of interest to you? What did the stock do? Let's clear it off. It broke above the high and it went sideways. That's like a little mini flag pattern in and of itself. In other words, we took out resistance and we held that level. Traders might say, Mike, yeah, that's a positive. I'd like to see it here because if I'm only running it for 2 days, I might have missed it. In other words, a lot of times stocks will break out and they will come back down and rest on the prior high because stocks staircase higher before they can go up, right? Which is a possibility there, right? With the trend and the breakout, there's a lot of indications that traders might look at. All right, folks, by the way, Ben did post in the chat that there is a survey link. If you can get a chance to fill that out, that'd be fantastic. Just 2 questions in there, loved it or hated it basically, but there's also a comment section. So any topic requests you might have, or whatever the case might be, however you feel about the presentation, if it's helpful, let us know, folks. And if it is helpful, do me a favor, just smash that like button. It just lets us know that you're getting value out of this. We're going to go ahead and run that scan here in just a second. But and just while I'm at it, super quick note. Love to have you follow us on our Trader Talk channel if you're not already following us here. It's a great resource for all of our classes. We teach quite a few of these, actually. In fact, here are a list of our playlists right over here. Tons of just great material. There's Ben right there. There he is. There's a couple Bens. Ben times 2 right there. And other stuff. Of course, Ben's a great instructor on our road, on the road as well, that we have. And so love to have you. I'll just put this into the box. Boom, boom. Will gave us the thumb up. Thank you, Will. All right, everybody. We got that. And then last but not least, then we'll get right back to our search here. But I'll just put in, this is my, in fact, I'll share that handle with you in just a little bit. But that is just the X handle. Anyhow, side note, let's get back to our discussion. Here we go. So let's get back to our scan. We built that scan, folks. All I'm going to do, remember, this is within 2 days. I'm just keeping it tight for today's class. That's all. But you could have greater interest. See how quick that was? Wow. That was less than a half a second. That just went through roughly 500 companies just like that. And here you go. So we've got the companies lined up. Here you go off onto the left-hand side. And that's it. So these companies are doing what? They're breaking above a range. Now, our job is to identify the price pattern within it. And today we're going to be looking at options on this. So let's just go ahead and take a look. There's line. See, this is a industrial. Some of these chemical commodities have been moving as of late. Let's take a look at LYB that was on there. LYB. And we're going to keep this up, our channel, so we can see it all. Oh, do you guys see it? It's right there. And by the way, let me just state a little side note here. This also might have another price pattern. I just like to recognize them when I say them. Notice this pattern over here. Something a lot of traders love. Cup and handle, perhaps. Remember, the last part of the cup and handle, folks, is just you see it? Just the bull flag. But it's built on a potential reversal pattern that did actually take out the prior high over here too. Oh, right over there. Let me get some of these lines off so you can see it. There is your breakout. You see it taking out the 30-period moving average. Basically what this was the last high over the prior 30 days right there. Now, some traders would say this and they say, Mike, this is interesting because is the trend defined? Well, the cup and handle kind of helped us. It's kind of a deep cup, meaning that we had a higher high, higher low, higher high, higher low, and now another higher high. Today, we'll see where it closes, but it looks to be falling into that range for the possibility of a breakout. Now, let me just take this off the screen because it is kind of difficult to see that pattern for a second. We already know that it broke out because we saw the line. So we'll tap into that in a second, but we know that it broke out and our scan, just like that, found it. Okay. Here is the price pattern right there. There's the flag we're looking at. Now, like we said, this was our very first one we discussed today, and that is the breakout of the flag. the breakout with that additional insight, and that is a bit of a breakout of the flag. And some of these chemical companies have been doing okay as of late. We'll see how it goes going forward, but the group, many in the group have been trending up, and you see it right there. Okay, so there is the breakout. Now, if this was a flag pattern, and you can see right over here, this is the move, so it looks like the flag. The follow through, you take this price range right there, the price is here, the price here, and we take that same price range and we add it to the bottom. So that is this approximately. I'm just eyeballing it. It might put us very close to this prior high, which would be an interesting time where traders would say, yeah, I might take it off the table if it hits. But what does this tell us? In other words, there could still be some room in there for prices to rally up to this point right there. So this could be seen through the lens of some traders as the opportunity zone for that price pattern to move up. And that's that search, that simple, basic one-liner really got us going, folks. It got us here along with some of these others to check out. Now, that's not a very big list. That's 12 stocks out of, well, 500. That's not a big number. And that would have taken us a little while in our eyes, like I said. We would have been watching movies over here on the right as we were clicking through. I just say that because, yeah, I've done that before. Yeah, it's tough to just look at 500 stocks at a time, but this is a great tool to help you guys try to find these quicker. So let's do this. We're talking about options today, and some traders might take a directional option if they wanted to see prices going to the upside here, right? They might be looking like, say, for example, a long call. But if they thought prices might be somewhat neutral, sideways, they weren't as convinced, they could do something like selling a put, and that might be down at lower levels. Like, that's a big minus, but minus a put. Selling a put to try to generate income there. Now, a quick note on that, if we were looking at those options, and again, some traders too might just say, I like stock. Stock is what they do. It's today's discussion's on options specifically, so we're going to address that. But stock, I've talked about this a lot. Rachel talks about it mainly, a lot of stock and options in the swing trading class as well. The bull flag is really a foundation of that swing trade class, the same as what Rachel does a lot in this class too. But side note, if we did a stock, we just have to buy low and try to sell high, right? But there could be some moves in there. Now, the same thing with kind of a long call. Of course, we have that time element we need to consider. So long call, short put, or even a spread, like a short put spread as well, could be looked at. Let's do this first, because a key component here is how much volume do we have behind this one. So this one this isn't too bad. Gosh, I don't know about you guys, I've been getting these, I've got to adjust this, I think, somehow, but I get like a decimal place of six decimal. I really don't need that. I'm just looking at the volume right there. So sorry for that, but yeah, it's got about 4.5 million shares today. Now that can help to facilitate a tighter bid and ask spread over here. Okay, calls on the left, puts on the right. Let's look over here though. This is a really shorter term trade, and we might want to mix this up a little bit relative to what we're doing. And by the way, how does this look? Let me do this. I'm going to add to this real quick. Gosh, I need to get in. I might take out a couple of these here, folks, and then I'll just add in I did want to see the open interest in the volume, right? Because this is really, really important for making sure that spread is going to work here for us. Volume on the day in terms of the option as well could be interesting. Some traders, they're looking for maybe 100, excuse me, in the 100 range, and we've got plenty of these here. So that's a positive, all else equal. You can see we're in the thousands over here in terms of open interest contracts that are open there. And so coming over here, the spreads still are a little bit wide, I must say. This is only 16 days left to expiration. If we were to do just the short put on this one as an example, let's look for long calls on some of the other trades. But for a short put, because the longs, even if we go out here and we go out over a longer period of time, in fact, if we are, by the way, key point, if we're selling options, a lot of traders will look for 20 to 50 days. We're kind of in that range right now. We're a little bit below on both of these. I'm going to just go ahead and stick with a March right now. 16 days left. We've seen volatility increase, and that could be a positive in terms of keeping premiums higher anyways. But this is for selling options. So like, for example, time for those short puts, it could be totally different for long calls though, right? A couple of different ways to take advantage of a bullish to at least a bullish neutral type condition. I'm going to go ahead and just do a March here. But if we were looking at a long call, some traders might even go out 3-4 months. It just depends how long of a move they're expecting to see and what their expectations are, folks, on that stock. Remember, a long call, if we had a long call of, let's say, like a 4-month range or something, we'd be looking like this. Maybe we're thinking like, hey, we'll have like one flag and maybe another flag, and we think that LYB might have some room to go, right? And we're just giving it more time before expiration. Okay, we could also just say, hey, maybe a month and plus a little bit more would be another way to do it. But for now, let's just go into our 16-day. What I'm going to do is go down here and just show you that a lot of times traders might choose a delta range between a 20 and a 40. And a delta, again, just means a $1 change in the underlying stock will affect the delta. Now, we're on the put side. And so if the stock goes up $1, it's going to negatively impact these, which for us is a big positive. Because when this goes to 0, that means we can try to collect that premium that we're selling there, okay? So this has maybe a 15% chance, expectation that a trader might have a 15% expectation of going down to 55 over that range. So there's your 55. It's kind of the bottom end of the channel. In other words, prices can go up as much as they want, sideways, and even down to the short put strike is what traders are expecting, and they can still make their max gain. So do you see what we're doing here? We're using a trade like this, using that scan to help position us for maybe a greater probability of, or a greater expectation, I should say, of a greater expectation of being profitable on the trade, as opposed to just trying to buy here and sell up here with stock, or even the long call, right? So traders will anticipate, hey, as long as prices hold above that strike price by expiration, that's their expectation. Hey, they just collect the full gain. And it can go, that's right, 3 directions, and we can still collect that. What does that collection look like at 55? It looks a lot like $50 to $55 per contract we can collect if it unfolds that way. A little bit more, if we were a little bit more bullish, we could say 57.50 and sell that one. That's a little bit tighter, but 55 gives it a little bit more room. Okay, again, you could go out to an April. I'm just choosing it. This is like over the next 16 days, roughly. Okay, so I'm going to shoot, though, for a 55 right there. I'm going to shoot for the middle range, okay? There we go. 55. Let's just go ahead and click on confirm. We'll just do a single contract here. That's fine. Actually, I'll do a couple contracts. We'll look at it here, and there you go. The buying power effect, a little over $1,100. The max loss, now that includes if the shares get assigned to us. Now, if the shares get assigned to us and we have to buy stock, let's say it goes below 55, we have to buy the shares at 55 if we decide not to get out, right? I mean, we could decide to get out. It kind of just depends. But if you think you're going to get assigned, let's say, for example, the case is you're below 55, we still get to keep the premium, but we'd be buying shares at 55. Some traders would want to own the stock down here too. They might say, that's great. If I sold one put contract, a standard equity options put contract, just one, that's equivalent to 100 shares. I get to buy it here, plus I get a pocket 55 times 100, right? That's just the multiplier. So basically just $55. Okay. And so because that's a support level too, maybe they want to buy down there. So I'm just highlighting, if you bought 100 shares here, folks, and we go all the way down to 0, okay, then yeah, LYB would have to basically go bankrupt, though. I mean, I'm just saying, to get that max loss, but I just wanted to highlight that that is there. Now, our credit, as you can see right there, is 110. Okay, let's send it through. I had to make sure I got everything there, but there's 55 right there. Okay, so 55 is there. It filled us. You get some fills in paper money real easy sometimes, but there you go. There you go. So there's the 55 fill. So anyhow, that's the fill right there. And again, that is an expectation built on a price pattern that gives it some flexibility, and you're just trying to make that income over that time frame, which is about the next 16 days. Now let's hit a couple others. Now this is another one here, MPC, Marathon Pete. Okay, did the scan work? It did, right there. It broke above the range. Does that look like a breakout? Yeah, it does. In fact, this is probably the 2-day, because I think we broke out here yesterday. So it's a 1, 2. Our scan was for at least within 2 days, and we're getting it today. And energy has been one of those areas with energy prices shooting up a little bit that's giving these guys are getting a little bit of love, aren't they? And so you might see a continuation of, let's say this. I'm going to show you a couple. There's another cup and handle here. There's your flag. The cup and handle projection off the bottom right there. I'm just going to eyeball it, folks, somewhere up here. Does that mean there could be more potential on this trade thanks to our scan? Yes, there could be. There could be. If it continues to go on up, which traders are looking for, and we said energy's been bullish, things can always change, but I mean, that's the direction. You're seeing it break out. It's building on that same information. So having said that, let's go ahead and take a look at this trade over here, and we'll see what we've got. Now we're going to move over here. Whoa. That's a lot of strikes. Okay, I'm coming over here and I'm just taking a look at it. Let's see where we're at. Now, these are a little bit wide as well in terms of the bid and ask. Of course, it is that's a 16. I'm sorry. Let's go to the April here. It's a little bit better here. This gives us 44 days. So if we thought, and this is one way to do the options, if we thought that we might just rally right here, we're basically adding in approximately 1 month, running out of space, but we're adding in like 1 month over here, approximate 1 month additional time for this to move. And that's why we're choosing the next contract out. Do you see it right here, right there, the April? Now, we're going to just use one right here, just as an example, right in the money, slightly in the money. We're above that level by about, getting close to $1 here. But if I try to buy this now, okay, I'm going to go over here and I'm going to try to actually buy it for a little bit less because there's a little bit of a range in there. I'm just going to say 11.75. Okay, I'm going to throw this in, and now we're just buying that long call, but we're giving ourselves time. Because today's class, yep, it's all about, creating searches for using price patterns for options. A few things going on there, but yeah, we're looking for this move and we're looking to participate as prices go up. Now, a quick note just on deltas before I put this through. It's about a 55 delta right now. That tells us basically for every, like we mentioned before, for every $1 increase over here, folks, every $1 increase in the underlying stock, every $1, the option will go up, and this is kind of an option range, by the amount of the what? The delta. So for every $1 increase, the option, in that range, just in general, we're looking at it to go up about 55 cents. Let's get back to our trade tab. It's right here. Confirm. Okay, it's about, it's kind of an expensive one, but it's going to be a lot cheaper than just probably buying the stock outright. There is your max loss. That's the amount we're paying right there. We said the buying power effect. Let's go ahead and send that through as an example. Now, as you look at a trade like this, as a quick note too, I did this fairly quickly, and I go into this more detail in my swing trade class. But folks, if I come over here and I right click, I can put a buy custom order in a bracket order. So there could be a stop level down below. We got to make sure that we go GTC. And another one over here, GTC off the bottom. And we can have different price levels in here that we can anticipate the option going up to. There's a lot more we can discuss, but for now, we just want to show you, yes, you can put an option trade on in here, okay? But there are some other things to do. And there's your stop down below as well on that option. Okay? So we got to fit everything into our time frame. So there you go. But with that, yeah. So one other one I'm just going to throw in, and then we're going to take a look at our final scan in here because you guys built that one. I'll share this one too. So you got, look at this one. This one just broke out of an extended range too, just barely, but breakouts looks different. This is actually kind of a double bottom pattern is what this looks like. I'm not, maybe the flag pattern's developing now, but interesting. I just pulled it out of that scan as I was looking at it there. All right. So with that, let's do this. Let's share this so everybody has this. And again, for those of you that are seeing this, it's a simple one. I want you guys to be able to build it as well. That's why we did it in class, but I'll share it as well just so you have it. But what I'm going to do is come over here and just put that in the box, and I will have that in the description section as well. So that's the first scan. And again, think scripts aren't guaranteed for timeliness or accuracy. I just wanted to make that note clear for you. Again, there is a survey chat in the link in the box as well. Okay, the next one and the final one, we're gonna finish up on this one. This is a little bit more advanced, but this, folks, is going to be the bull flag pattern. A little bit more scripting design. You couldn't really do this within the condition wizard. I'm going to show it to you right now. But basically, we're looking for a strong move up and maybe a 2 to 5 day pullback, and we are waiting for this to occur right there. Okay, this is the scan. No time to spare. Let's get into it so we could share it and get it going. But right over here. So I'm going to go ahead and just pull it up. And it is under the bull flag pattern. Where are you? There it is. There we go. Okay, bull flag pattern. Let's go ahead and scan it right there. And we just found that quick. This is a much longer scan. In fact, this is what it looks like in terms of the script. I'll share it right now so you guys have it. It's a little bit longer, as you can see. It's based upon an average, a moving average, prices being above. And we can add a longer term one too if we wanted to. I just kept it as a 30, a 2 to 5 day pullback. That's what the coding looks like right there. I'm going to share this with you guys though. Boom. Before I forget. So again, think scripts aren't guaranteed for timeliness or accuracy. This is the bull flag. I better just distinguish between the two. Again, I'll have that in the description section below for those of you seeing this on the recording. But there you have it. So you guys have it. And let's look at a few of these real quick. What about ABT's on the list? Abbott Labs? Okay, do you see the scan? The one thing I'll say is it was a big gap down here, but do you see the pullback right there? Let's get some that might already have a stronger trend involved. This has yet to turn up, if it will, but it's the beginnings of the possible flag. Oh, there you go right here. 2 to 5 days. CVS, a lot stronger. The trend is up, folks. Here is your break up and pull back right there. Do you see it? There's a little flag right there. That's all we're identifying is that little flag. Here's another one. I'm going to throw it out here and see if you guys can pick up on it. This is on our scan as well. I just took it down. Okay. This would have spotted this area here, and this area here. And now it's spotting this area right here. Now, will it continue with the structure of the trend? This scan is really helpful for trying to get you so you can have eyes on it, a little bit earlier than you normally would. This is what this is. This is what this does for us. It gets us so we're prepared for that trade. Okay, we can't finish without taking a look at, hey, what else is moving? Sugar water. There we go. We got Pepsi right there and Coke as well. But this one we actually had a prior trade on from last week as we talked about this in the swing trade class. But there you go. Do you see it? We ran up, consolidated. There is another flag pattern right there. There are no breakouts on this one, folks. It's only getting the pullback. It would have got this one too. Pullback. It hasn't broken out, but it might get you positioned before then, folks. Again, Great to have you guys on board. We're just about out of time here. Follow me on X if you'd like. There is my handle right there. Do post some technical stuff as well, and different scenarios and setups as well in there too. But love to have you on board. Just Mike Fairbourn CS. I'll throw that into our chat box. All right, everybody. Well, it's been good being with you. There was a lot. Yeah, I did share that. Yeah, those two right there. Do you see that script over there? Final note, come up top, copy those scripts, go to setup, open shared item, paste them, folks, in there. That's my Twitter handle. That's not going to work. And then hit preview and import, and you got it. It will show up in your scan tab right there in the middle hamburger icon. You can load them in your public or personal folders. All right, everybody, smash that like button. Great to have us on board, folks, and give us a follow on X. Thanks so much for your time, and fill out that survey if possible. All right, everybody, have a great rest of the day. Thank you, Ben. See y'all. Bye-bye.